Good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Anything said in this piece is an opinion only. So let's kick off and let's have a look at what is driving markets today. So the main item on the agenda is lots of items. Let's talk about the top item is number one. Top of the agenda is the debt ceiling. The debt ceiling has not been solved and the clock is ticking. In other words, the $31.4 trillion that the US now owes as far as its debt ceiling is concerned, introduced by the Liberty Act of 1917, says quite simple that the debt ceiling has to be adjusted according to agreement of the Congress and the House. Now, what you've got at the moment is you've got a debt ceiling that effectively is doubling every 10 years. Now, if that debt ceiling is not increased, which I've said over and over again, US is going to go into default. Now, as the deadline approaches from the beginning of June, where there's $650 to $850 billion of interest payments need to be paid on US debt. If they default, they can expect the US dollar to tank and for the US treasuries also price to fall and the yields to shoot up dramatically. Not only that, the credit rating of the US will fall. As a result of the credit rating, it'll be more expensive for the US to attract investors and it'll cost more to borrow money. In addition to that, you will have inflation going up as a result of a falling US dollar. The likelihood of the US defaulting is very slim, but as the time moves on towards the deadline, then the pressure is adding up. Quite simple. Now, the US did default back in 2011 and was downgraded. Since then, obviously, it's upped its grading to where it is at the moment, which is AAA status. Now, if the US defaults, then what's going to happen is there'll effectively be a run on the dollar because the US will not be considered the reserve currency, or the US dollar will not be considered the reserve currency, and the safe haven status of the US will be affected or impacted. And that would bring China and Russia into the fore. In other words, what the China and Russia are trying to do under the BRICS agreement, which is the Brazil, Russia, India, China, South Africa, are trying to challenge, with other countries joining it, are trying to challenge the US dollar as the reserve currency. Now, the Chinese want the yuan to be the number one reserve currency, but they could introduce as a conglomerate, which represent close to 40% of the global transactions in the world, which is under BRICS, and the expanding members that will join it, they could force a major challenge to the US dollar. So overall, the debt ceiling is a problem. If that is not solved, US dollar, US treasuries, credit rating, all be impacted as far as the US is concerned, and the stock markets will fall. That is for certain. The chance of it happening, as I said, is slim. Moving on to other factors and other events in the stock market. Yesterday in the US, retail sales came out lower than expected, and that is another indicator that the US is going into recession. Now, the US really is in recession as we talk, but it's not official. We're talking about official recession. They were looking at the end of the year, and now they're saying they may avoid official recession and they may just glide out of it. However, the US is in recession because most small businesses are suffering. Remember, when you measure recession as far as official Bureau of Statistics is concerned, they're looking at the top level and look at the top companies, the Apples, the Facebooks, the Amazons, the Googles, the Salesforce, the Intels, etc., to name but a few. Those are not the ones that run the US economy. What runs the US economy and runs most global economies is the small businessman, which makes up 95% of the business sector. Yesterday, Home Depot, which is a massive retailer, came in with lower than expected results, and its forecast was also negative going forward. That impacted on the whole retail sector, pushing down all retail stocks south. Now, as retail stocks fall and as obviously those sales falls, then the earnings are going to be impacted, and all the peripheral services associated with retail will be impacted further, again adding to the sense and the feel that they're going into a recession. Okay, something to take into account. US dollar slightly stronger yesterday, with strength yesterday. Against the dollar, yen was 136.5, against the pound 124.75. However, if they default, then you can expect the pound or cable to go to around about 129, 130 very, very quickly on the back of a default. Euro dollar, interesting one, coming at 108.35, where the euro dollar is running at 108.50, 108.60. It's got major support at 108. Now if it breaks below 108, then it's going to go down all the way to 105. I can't see it going to par like it was last year at this stage, but it all depends if it's going to fall further. Gold's interesting one. Gold last week went up to 2,047, 2,050. It's come all the way back down to 1,990, 1,991. I am bullish on gold, but the technical graph, according to what I've been looking at, one of my colleagues, Reader, sent me through over a graph of gold. I could be eating my words, because you could see it all the way pulled back to 1950, or according to him back to 1920, according to the graph. But I'm still bullish on gold, because if there is a default, then you could see gold shoot up. However, on technicalities, it does look like gold is going to pull back, so I eat my words on that one. Did get it wrong, was calling it near term going up to 2,050, 2,100. Looks like could be pushing down to the 1950 level. Longer term, so I'm not talking about a day trade here, I'm talking about more of a swing trade or longer term. I do see gold at the 2100 level. You can comment and just give me your input on that one, what you think of those particular thoughts. Oil, very sensitive to recession. If there is a recession, or we move on to recession, you'll see oil fall away and fall down even more, because obviously if it's a recession, less oil is needed. Looking at some interesting shares, I would say Apple looks like a sell at these levels in my opinion. Tesla looks like a sell. Facebook looks like a sell also. Amazon's gone up for the last 11 days, looks like a sell. So those shares on the tech side do look like a sell and do look overbought at these levels. This is Mayor Valensky with Driving Markets. You can catch me on Instagram and TikTok. Also, you can share, subscribe, comment. Most importantly, I want to try and build the channel. Have a good day. Speak to you soon.